Right. So I want us to look at the example that we've been given, and 2.12, or which is basically on page 62.
Yes.
Are you there?
Yes, sir.
Now, I want us to look at the required part. So they are telling you the following are miscellaneous transactions for top traders for the month of January 2011. Ignore VAT. The business uses the perpetual inventory method with a markup of 60% on cost. Now, I want to explain something. When they say, okay, this is just notes, okay? When they say markup on cost, here's what it means. It means when you want to calculate the profit, you'd have to say something like this. I'll show you how the formula should look like. Okay, so all right. I don't know why it's taking a while. Okay, perfect. So it means when you want to calculate profit, you take the profit amount, all right, or sorry, markup rather, divided by the cost price percentage plus the markup itself. This whole thing has to be multiplied by sales, okay? So if you want to calculate the markup, the profit out of markup, so like what they are giving you there, all right, say markup is what, 60%, right? So it would look like something like this. Let me show you real quick. So it could look like, in this case, you would have 60% over there divided by the sale cost price percentage plus the markup. So this is what signifies sales as a percentage, which will be 160. And then let's say, I'm just giving this as an example. So the sales value, maybe it's 100K. Therefore, what will be our profit here if you do the calculations? If you do the math, how much are you getting?
It says 37.5.
How much?
37.5. Wait, sorry, sir. Hold on, sir.
Okay.
$60,000.
Yep. 37,500.
Oh, gosh.
You were right.
I put it. Yeah.
You see it. So what am I
made a
trying to
mistake.
emphasize to you? I'm just trying to say whenever they say markup on cost, so when you want to calculate the profit from that, you just take up the markup itself, which is that valued 60%, you divide it by the cost price percentage plus markup, which is normally the sales percentage anyways. It will be 100%. So the cost price percentage here, it's always 100%, okay? And then the markup is that 60. So 100 plus 60, that's where this 160 is coming from. Are we together?
Yes.
Are we? Right. So that was to explain that. But now let's look at the typical example. you've been presented with some table there. So I'm going to try and structure something that look more like that. So let's have a look at that. So we've got a structure that looks like this: the date column, the assets, and you just need to indicate the value, all right, in rands. So they say assets equals to what? Owner's equity. So owner's equity simply stands for equity. Are we together?
Yes.
Which is also to be given in rands. Then plus what? Liabilities, which also ought to be given in rands over there. Something like that, right? Now, they gave you an example for the first transaction. You received the capital contribution of 205,000 in the form of cash. So what would happen to assets? Because cash, that's bank already affected, right? So obviously that will be a plus on assets by 205,000 rands. Why? Because money is coming into the business. That's affecting the bank account of the business. So bank is affected, which is the asset. Hence, you see the 205,000 increase under the column for assets. And then you'd see a 205,000 increase on the column for equity. Why? The money came as a capital contribution. Question is, what is happening to the capital invested into the business, which is equity in this case? It's increasing. That's why you see a plus 205,000 over there. Are we together?
Yes.
Let's do another one. Can you read transaction number 2 there?
The owner took clothing from trading inventory for personal use. The selling price is the owner took clothing from trading inventory for personal use. The selling price is 850.
Right. What is the owner doing there? The owner is taking, right?
Yes.
He's taking something that belongs to the business, right? And he's taking it for what?
For 850.
Okay. Right. So the owner took what? Clothing from trading inventory for personal use. The moment you yes, the owner is taking something for personal use, that means drawings. And remember, what did I tell you? Whenever the owner of the business is taking, it's a plus or minus on equity.
It's a minus.
It's always going to be a minus on equity. Remember there.
Yes.
Right? When we were explaining about equity earlier on. So, yes. Sorry, yeah. So I say drawings. Here's how drawings can affect equity column. So in this case, obviously, because the owner is taking something, so we expect to see a minus for the equity column with how much?
850.
850 rands, right? And then what about the stock, the trading inventory?
It's gonna be minus 850.
Minus 850 here. Because the assets are going out of the business, right?
Yes.
So that's a minus also. And then let's go to the next transaction. Does it affect any liability there?
No.
It does, right? That's why you see this that we put there for the liability column. Okay, let's go to the next one.
Paid SA distributors by EFT for trading inventory purchased 7,000.
So we paid by EFT. That means money is going out. Which asset is affected by that? Bank.
The bank, yes.
Yeah. So the bank is going to be reducing, right? The assets column by how much?
7,000.
Exactly. And because it's inventory, we are paying for inventory, right? Inventory is coming into the business. So it's going to be like this. Does it make sense? One asset is increasing, then the other asset is decreasing, something like that. So far, so good.
I don't think I understand the third one.
Oh, let me explain it to you. Let me just re-explain it so that you understand it, right? Because it can look kind of tricky a bit at times, eh?
Yes.
But it's pretty simple and straightforward. So here's what's happening. Let me start again. So we are saying we paid for this. That's why we're saying minus 7,000 for assets, right?
Yes.
Let's look at what inventory system they are using, the perpetual inventory system. So with the perpetual inventory system, it means we are going to be dealing with inventory, not purchases. So that means because we are paying 7,000 to buy trading inventory. What is inventory by nature? It's assets. What is happening to inventory? Is it increasing or decreasing? The trading inventory?
It's increasing.
Yeah. So that's why you see there's a minus 7,000 under the column of assets, and also there's a plus 7,000 under the same column for assets. So the minus 7,000 is because of money coming out to pay for the trading inventory. And then the plus 7,000 is for money coming, for the inventory coming into the business that we had bought in cash. Making sense now?
No, I understand. Yes.
Pardon me?
Yes, making sense.
Away. Number 4, read it for us.
Purchased an office printer equipment on credit from offer PTY Ltd.
Right.
7,200.
Right. What do you understand then?
The business bought a printer that was 7,200.
By nature, asset, liability, equity, expense, income. What is it?
It's an asset.
Right. What's happening to those assets in the form of printers? Are they increasing or are they decreasing?
I think it's decreased. I'm not sure.
Read the transaction again and you'll see the answer there.
Purchased an office printer on credit.
Right. So if you're buying something, whether on cash or credit, it means you'll be receiving that something you are buying. Does it make sense?
Yes.
So when you are receiving it, what's happening if you're already having something like that? Let's say you already have another office equipment printer somewhere. Now you're buying another one. What's happening to the printers? Are they increasing or are they decreasing? Are we buying an asset? What's happening here?
We're buying an asset.
We're buying an asset. And so when that happens, what does that mean? Because we are buying an asset. So that means assets are increasing. right?
Okay.
But in this case, because we are buying it, we are not buying it for cash. We are buying it on what?
Credit.
Exactly. Meaning liabilities will be affected as well. So question is how so? So okay, we understand assets are going to increase by how much? 7.2. But what's going to happen to liabilities? Are we increasing our liabilities or are we decreasing our liabilities? Because I'm saying we bought something on credit, meaning to say we obtained something on credit. Does it make sense?
Yes.
So when you obtain, what's happening to liabilities? Increasing or decreasing? Here's your answer. Obtain credit from a supplier, this
It's
case.
increasing.
So it means your liabilities will increase, right?
Yes.
Plus 7,200, like that. Making sense?
Yes.
Right. Let's continue. Number 5.
Cash sales of trading inventory. The selling price is 7,950.
Right. So the moment you see cash, which asset is affected?
Asset.
Yeah, which asset is affected? The moment you hear of cash, EFT, money, what asset? What is the name of that asset that's affected by that? It's always bank. Does it make sense? All the
Yes,
time.
yes.
The moment you see cash, EFT, wara, just know a bank will be affected, right? All the time. Now, in this
Okay.
case, what's happening? If we've made sales, are we receiving cash or are we spending cash?
Sorry, sir?
In this case, because we have cash sales of trading inventory at that price, does it mean are we receiving cash or are we spending cash?
Are we receiving cash?
We're receiving cash, right? Meaning say bank is increasing. So it's going to be plus on assets of 7K 950. And then since it's income, what's going to happen to the equity column? What do income's effects do? I mean, what are the income effects on equity rather? It's here. What do incomes do? The equity column, the answer is somewhere here.
Oh, they would increase equity.
Exactly. So that means it's a plus on equity. Do you see that?
Oh, okay.
Making
Yes,
sense?
I understand now. Yes.
Are we? Right. Any questions on example 2.1.2?
Let me just have a look. No, I think I'm fine, sir.
You're fine so far?
Yes.
Are we? Now let's proceed to page 70. Wait, go to page 68. Page 68.
Okay.
Yeah. I want you to try and do that question with me. Okay, I want us to do that question together. But this time I'll be asking you questions. What do you do with this? What do you do with that? Stuff like that, okay? Now,
All
right. So we're doing question what?
right. 2.11.
Question 2.11, right? So I'm just going to delete this, right? Notice it's the same type of stuff, right? Now read the required section of the question. What does it say? Question 2.11.
The following are miscellaneous transactions for Redgrave traders for January.
The required part first, which is at the bottom.
Okay. Show how the mentioned transactions will affect the accounting equation and enter how the accounts in the general ledger will affect. Example, received a capital contribution of 100,000 in the form of cash.
Notice, what do they want you to show? Whether it's going to be plus or minus on equity assets, equity liability, and also indicating what account will be debited, what account will be credited. Do you see that?
Yes.
Right. I'm going to do the first one for you. Is it fine?
Yes, sir.
Right. Read for me the first transaction. What are they saying?
The owner took clothing from the trading inventory for personal use. The selling price was 1,500.
So the owner is taking, right? So whenever the owner is taking, what is he taking? Trading inventory. Already I know it's going to be a minus because of whatever he's taking. So it's minus 1.5. Now, this, because it's involving drawings, it means owner's equity is also going to reduce by the same value. Are we together?
Yes.
But now let's identify the account debited and the account credited. Now, notice if assets are reducing, it means that asset that is being reduced is the one that's going to have to be credited. So we're going to credit what here? Trading inventory. Are we together?
Yes.
Why? Because that's the asset that is being taken. That's the asset that's decreasing, right? And then on this side, under owner's equity, we will debit drawings. Why? Because the owner is taking something that belongs to the business for his or her personal use. Are we together there?
Yes.
Then we go to the transaction on the 8th. What are they saying?
Paid SA prop by EFT for trading inventory purchased 10,000.
So what are we doing there? We are buying inventory, right?
Yes.
So you explain to me which columns is it gonna affect and how is it gonna affect those columns? So what do you see when the moment you see EFT, cash, or check? What should come into your mind?
Asset.
Yeah, which asset is it?
Current asset.
The name of the asset that is gonna be affected. That's what I want to know.
The name of, is it bank?
Yeah, bank. The moment you see EFT cash, you already know bank is affected there. But now you need to look at how is the bank affected? Is it gonna be a plus or minus? So now if I'm looking at that, we are paying. So it means it's minus, right? What are we minusing there?
Bank.
Minusing bank, 10,000, right? But we are buying inventory. So inventory on the same side, it's also an asset. So it's increasing at the same time. So it means we're going to be debiting trading inventory because we are buying the inventory. Our inventory is increasing. That's why we are debiting. And then what are we going to credit? We're going to credit bank. Why? Because we paid for it in cash. Does it make sense?
Yes.
So this transaction will only affect assets. Are we together?
Yes.
Let's go to the transaction on the 10th.
Purchased an office computer, computer equipment on credit from Incredible Computers, which is 5,200.
Okay. We purchased an office computer, right? On credit. Now, the moment you see credit, what do you think will happen to liabilities there? On credit. We are buying on credit. What is happening to our liabilities, plus or minus?
It would be a minus.
It would be a what?
A minus.
No, we are buying on credit, so we're getting more scalloped. So what happens to your liabilities, plus or minus? Logically speaking, it will
Oh,
be
liabilities.
yeah.
It will be a
Oh, sorry,
plus,
let me
yes.
start here. Let me start here first. Right. We are buying an office equipment. What's happening to the office equipment? We know it's assets, but what's happening to office equipment? Are they increasing or are they decreasing there?
It's increasing.
It's increasing, right? That's why we're gonna have plus
Yes.
what? Plus 10,000, right?
Yes.
And what is that?
No, 5,200.
Oh, sorry. Thank you. So that was an error on my end, 5,200. So we're gonna debit what there? Computer equipment. And then with liabilities, they will increase by 5,200, right? So we're gonna have to credit what? Creditors control there. Are we together?
Yes.
Because we bought something on credit. I'll leave you with the rest of those ones from number 15 to 29 for homework. Are we together?
All right, no stress.
Yeah. So I want you to do number 15. I want you to do number 27. I would like you to do number 28. And which one is the last one?
29.
And 29. But do this one for homework. So I'm going to send you the homework questions via WhatsApp just now.
All right, sir.
All right, buddy. Any questions so far on what we have covered?
No, I think I'm fine, sir.
So far, so good, right?
Yes.
All right. So good. Have a good one, buddy.
All right. Thank you, sir. You too, sir.
Welcome.